In the last video we know what is direct tax. In this video we learn what is indirect tax. If you are not see what is direct tax, in last video, first go to player list and see. Let's start. What is indirect tax? Direct taxes are levied on taxpayers' income and profits. However, indirect taxes are charged on goods and services. The taxpayers pay the indirect tax to the government via intermediary and thus they are indirectly paid to the government. The Central Board of Indirect Taxes and Customs, CBIC, is responsible for the collection and administration of indirect taxes, which is governed by the Department of Revenue, just like CBDT. Types of indirect taxes in India. Goods and Services Tax, GST. GST is the most common example of indirect tax, which has replaced an array of other indirect taxes in India such as value-added tax, service tax, excise duty, purchase tax and more. GST is a single, unified and the most comprehensive indirect tax which is imposed on the goods and services on the basis of the tax slabs laid by the GST Council of India. Customs duty. Customs duty is levied on you if you purchase any goods and service from abroad. This duty has to be paid, irrespective whether the product has reached you by air, sea or land. Thus, customs duty is an indirect tax which is imposed to make sure that each and every product coming into India is taxed. After the introduction of GST, a huge change has come in the entire tax landscape of the country. The various indirect taxes such as VAT, service tax, sales tax and others that were mandatory earlier have now been abolished. GST truly goes by its slogan of One Nation, One Tax, One Market. Pros of indirect tax. Every individual contributes. Payment is very convenient for taxpayers. The collection of taxes is quite easy. Cons of indirect tax. Regressive in nature. Makes the goods and services expensive. Less transparent for end consumers.